Good morning, guys, and welcome to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, after the week closing for the markets yesterday, it seems like the bears have taken the initiative. We are looking at a very sloppy start for the Wall Street this morning. If you look at the Nifty 50 futures on the Singapore exchange, they are indicating a negative 45 to 50 point start for the Nifty 50 today, especially after the week closing that we have seen on Wall Street yesterday.
CJ, I think you just swing from one extreme to the other. Either it's bulls all the way or bears all the way. I mean, just probably just bulls are pausing for a breather.
Yeah, that is what I'm saying. Yesterday we saw a pause, but today I had expected that probably bulls will retake the initiative and come back after the pause. I mean, after all, how much of a rest do you need? You only rose for 3 days, right? That said, if you look at the cues from global markets also are not very encouraging, Santo. As I mentioned, Wall Street closed lower. At the same time, Asian markets were also quite mixed, with Chinese and Hong Kong equities in the red at this point of time. But the major concern that is emerging again is crude oil. Brent crude oil futures hit about $123 per barrel overnight, and they saw a significant increase, especially with the European Union bringing in new sanctions against Russia. That has again boosted traders' confidence that oil is headed higher.
Well, very clearly, I think the problem of higher commodity prices, I think that's once again surfacing. The market seemed to have gotten over it, but now with crude prices now steadily rising, that's a big negative for India.
Especially India. I mean, if you look at the bond market yesterday also, I mean, we saw more than 4 to 5 basis points up move in government bond yields. That's also suggesting that suddenly crude has become, and inflation again is back in the forefront of investors' psyche at this point of time.
Okay. Also, most analysts now, the general view is that the recovery is not likely to be all that great. CLSA for one is saying that the recovery is likely to be a shallow one. It's also slightly trimmed its GDP forecast for FY23. I think given this backdrop and the fact that we have seen steady cut in earnings estimates by most analysts, even during the Q4 earnings season, this problem is only likely to accentuate further in the first quarter. So I don't think it's smooth sailing for now, CJ.
Yeah, at that point of time, it looks like a rough ride for both bears and the bulls. They are not, neither the bears are taking hold of the narrative at this point of time, nor are the bulls. That said, there is plenty of stock action that we need to dive into. Me and Santo have picked up about 5 stocks that we feel will be in action in today's trade, Santo.
So starting with Deepak Fertilizers, now this is also a stock on which broking firm IFL has initiated coverage on. So this is chemicals plus fertilizers play,
right,
and good strong set of Q4 earnings, and the most heartening part was that the company was able to pass on higher input costs and freight costs on to its consumers. So that is something
right,
which is positive. Also, nitric acid prices are expected to be very strong. That's what the company is saying, and it has commissioned 2 projects, one for ammonia backward integration and the other for technical ammonium nitrate. Now, when both these plants get commissioned and come on stream, IFL is of the view that the earnings per share could go as high as 85 to 90 rupees. It's very bullish on the stock and has initiated coverage with a buy recommendation and a price target upwards of 1,000 rupees.
Well, Sandro, things do look pretty for Deepak Fertilizer, but another stock where things are looking up is at this point of time is Info Edge India. The company came out with its March quarter earnings, right? I mean, we know the context in which the company's earnings came out. It has fallen 30-35% odd from its highs, over the past 6 months. If you look at its drawdown from the 52-week high, is more than 45-50% at this point of time. So quite a weak sentiment heading into the earnings, but the March quarter earnings were very, very strong for the company, especially for the core business, that is Naukri.com and Shiksha.com. Both the divisions saw quite a healthy performance in March quarter. If you look at Naukri's performance per se, they reported highest ever margins as well as EBITDA of about 385 crores in the March quarter, and the company has indicated that hiring momentum has not slowed down in April and May. So that goes to show that even the June quarter could be quite strong for them. So from my perspective, also if you take into account the recent revival in the stock performance of Zomato and PB Fintech two companies where Info Edge India has substantial stake and has been moving in correlation with those two stocks. I feel that the correction in the valuation plus the strong earnings definitely makes this stock now very attractive for investors who are looking for a turnaround in the coming quarters. If the earnings trajectory remains robust as it has in the March quarter, probably investors will start giving Zomato, I beg your pardon, Info Edge India a second look after the correction that we have seen.
See, that slip of mind exactly, betrays the state of mind. It's because Zomato is doing well, then Info Edge should automatically do well. Well, that apart, CJ.
Info Edge is doing well on its own as well, Santo.
But CJ, I have some doubts there. Now, for instance, you can't really apply the traditional P valuation method for tech companies. Obviously the numbers are, the earnings multiple is typically very high. But in this case, if you see, for FY21 as well as 22, a big chunk of the bottom line, in fact, almost all of it was driven by other income, 4,500 odd crore during the FY21 and about 13,000 odd crore in FY22. And if you also look at the sales, they've also been growing at a very steady rate for a company, which has a very, very high valuation. So how do you defend that?
Well, Santo, the other income, of course, is a boost because they have been, selling stake in two of the IPOs that have come in over the past 12 months, which is PB Fintech and Zomato. So therefore, that is where the other income boost has come in for the company. But overall, the profit trajectory, even prior to the pandemic, was quite strong. I mean, let's not forget, Info Edge was one of those, creme de la creme growth stocks in the market. Yes, the recent correction has largely had little to do with the fundamental side of the business and more to do with, probably froth being taken out of the valuation, given that Info Edge being a platform company, being an internet platform company, it had seen its valuation run up significantly, much like rest of the peers in the market, such as IRCTC, for example. So I feel that the correction, while much needed, has probably been overdone at this point of time, and therefore, given the earnings trajectory, it definitely makes sense to have a relook on this stock, and that is what I'll be doing.
Well, the whole focus seems to be on Naukri, but also remember there's also the real estate part of it, and you have the.
But the Naukri is the biggest business for them, so of course that will always be the biggest, attention point for investors when they look at Info Edge's performance. Yes, 99 acres, Jeevan Sathi, yes, they have not been as great as probably you would expect them to be. But at this point of time, Naukri is doing the heavy lifting for the company, and along with Shiksha.com, which is also coming up quite well. So with those two divisions doing quite well, I think the company can afford to probably not pay that much attention to Jeevan Sathi and the real estate, online forum side as well.
Well, the third stock on our radar is AIA Engineering, good set of fourth quarter numbers, and again what sets AIA Engineering's numbers apart from others is that it's been able to not just maintain its margin but also pass on higher input costs. It did about 30,000 tons of sales in during Q4, which was better than what most analysts were expecting. And here is the important part about that. It's a big play on the mining sector, and right now, given the way commodity prices are moving, we could see more mining operations across the globe. Also, AIA Engineering has about 11 subsidiaries, many of them, in countries abroad. So from a global perspective, this looks to be a good stock given the upswing in the mining cycle.
Well, Santo, probably 1 year ago, the upswing in the mining cycle would have been a point of difference for AIA Engineering. But today, at this point of time, the outlook does not look that pretty for the mining sector, especially if you look at it from a global perspective. We know that we are in a global slowdown at this point of time. We have seen the IMF cut for GDP forecast estimates for global economy twice almost in 2022. So for me, that remains a key risk, and that will probably deter me from being optimistic on AIA Engineering. Even if you look at the domestic market as well, the domestic mining industry has seen merely 2% of growth from the pre-pandemic level, which does not really speak much for a sector that has been touted over the past 12 months or 18 months that it's going to see robust growth going forward. Apart from that, new mines, sanctioning of new mines or commissioning of new mines is likely to be quite slow. It will not be the heydays of 2000s and 2010s that we knew, because ESG is a big concern for companies now. They have to make sure that the mining activity they do is compliant with ESG mandate that they have promised to their investors. So I, for one, do not see that much hurry for commodity producers to go out commissioning mines, because they would probably want to enjoy the supernormal profits that they are enjoying from the tightness in several commodity markets at this point of time. That said, another stock that is looking good on the consumer side of the economy is Crompton Greaves Consumer. They reported a decent quarter for March quarter. Basically, the earnings were in line with Street's estimate, although they did see some margin pressure, Santo. But the key part here is the consumer durable business of Crompton Greaves. They gained market share both in fan and other products as well, which goes to show that their investments is paying dividends now going forward. Plus, analysts feel that the recent acquisition of Butterfly Gandhimati that they did, although it may not be too accretive to the earnings per share in the first year, but second year onwards, the management has indicated they expect significant bump to their earnings as they probably gain much more market share in the consumer durable space. Apart from that, the management has indicated that there is going to be strong focus on margins, growth, as well as cash flow. And yes, Securities believes that growth prospects for the company are definitely looking up in an economy that is looking to probably outperform the rest of the world in 2022.
Well, just a couple of points there, CJ. One is that, the company has been able to protect its operating margin, but that was also largely due to, control on costs rather than actually growing its EBITDA. If you see in the electrical consumer durable segment, it has actually trailed other rivals like Havells and Polycab. Also, if you look at the pumps business, that has been a drag, and that's something that analysts see could weigh on the overall bottom line. Besides, the business to government segment of the company has also not been doing all that well, which has led some analysts to trim earnings estimates for Crompton Consumer.
Well, Santo, I totally understand that the durable business growth is lagging behind Havells and other larger peers, because this is a company which is trying to get into that segment and has come into the segment quite late. But it remains a very strong story in the overall fast-moving electronic goods segment that is dominated investor psyche over the past 2 to 3 years. I mean, we have seen the performance of Havells India, for example. Voltas is another stock. But I feel, and like a few of the analysts out there who feel that the company is taking the right steps in the right direction to try to gain market share without losing much of the profitability that it enjoys. So that for me is a sign that probably there is a brand pull for Crompton Greaves, and this could probably translate into better margins as well as growth going ahead.
Well, the last stock on our watch list today is Rail Vikas Nigam. Now, this is an arm
Interesting stock.
Yes, a PSU, and it executes the projects for the Ministry of Railways. Now, this is again an overlooked stock, has not performed all that.
Maybe for a reason, Sam.
Oh, yes, of course, they all have a reason for that. And the stock is available at less than book value. What the management is saying is that it intends to, the margins have been under pressure for a while, but it intends to reverse that by taking more business from non-government bodies, so that that's expected to make a difference this year onwards. Besides, it's got a very strong order book at this point, close to about 55,000 crores. So all this put together make Rail Vikas Nigam quite an attractive bet in this market.
Well, Santo, Rail Vikas Nigam has been underperforming throughout of 2022, right? And I think that underperformance is telling, given, and it probably shows the growth concerns that market has for the company at this point of time. Let's not forget that in a year where government is trying to cushion the blow of high inflation on the economy as well as on consumers, the subsidy bill is going to rise, and therefore capex might be the first segment that might take hit. And within capex, railways capex could be probably the top of the list, which might be pushed to the back burner while government focuses more on infrastructure and road development. So for me, the order book outlook does not look that great from my point of view. Also, the stock lacks any meaningful momentum at this point of time to enthuse an investor like me who would want to see good returns over the next 12 months. So probably there are better bets out there in the market than Rail Vikas Nigam.
So the market has opened a flat start for the Nifty, 16,584.
Surprisingly, but now we have dipped into the red. Yes.
Advances to decline still in favor of gainers. So 1,417 stocks have risen compared to 450 losers, which means that there is good interest in mid-cap stocks.
Yeah, I mean,
also.
that is what we are
trend
seeing
for the last last few days.
Exactly. I mean, for the past 2 days, we have seen the broader market outperform, and that is clearly the GDP data that came out and which showed that growth had slowed down for the third quarter has not affected the outlook for small cap and mid cap at this point of time. If you look at
Robin Hoods are not willing to give up without
absolutely.
a fight.
We will not. We will not. If you look at Nifty Small Cap 100 Index, it's up about 0.5%. Where the Nifty Mid Cap 100 is up about 0.3% at this point of time. Clearly outperforming the benchmark indices, and that is quite a good sign if you believe, if you want to believe in the country's economic growth, and you believe that consumer economy will probably come back later this year once the rural demand side picks up.
The banking was under pressure and now it's just moved back into the positive. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and the Moneycontrol app. We'll catch you live again at 3 p.m. with all the day's action. Till then, have a great trading session.